Seth Klarman is here. He is the legendary investor behind the Boston-based hedge fund, the Baupost Group. It is one of the world's most admired money managers.
So I try to focus on bottom-up individual situations, stocks, bonds, real estate transactions, and I don't spend a lot of time thinking about things where I think the answer is pretty imponderable.
Seth Klarman is regarded as one of the world's top value investors. He has one of the greatest long-term track records, having compounded his investors' money at more than 20% for the last 40 years. Warren Buffett has even said that Klarman is one of only a few money manager he would invest with.
So I do spend time thinking about technology, and part of that, at least, is to avoid being on the wrong side, to avoid being in a company that gets disrupted. I think something like crypto, which I've tried hard to understand the arguments and figure out why people are so excited about it, and I can't find value there. So I'm not making a judgment that it might not go up. I have no idea. But we focus our time where we think we might spend it productively.
Seth Klarman's investment strategy focuses on buying undervalued assets, often in distressed situations. In his book, Margin of Safety, a rare and now out-of-print book, he emphasizes capital preservation over high-risk gains, believing the goal of investing is not to make big gains, but to avoid big losses.
And so I think value has to be determined for every company. The way I think about the market is not that there are growth stocks and value stocks, but rather that all stocks may hold value, but that all stocks also could potentially be overvalued. So you have to have a mechanism, a rubric for figuring out the value of different kinds of assets, different kinds of businesses, and then figure out which ones are trading particularly mispriced.
In this short video, we are going to analyze some of Seth Klarman's investment principles to understand how he has created so much wealth for his investors and himself. We will hear directly from him, in his own words. We are also going to show you what stocks he owns right now, so you can invest alongside him. This channel is focused on delivering the highest quality content about finance and investing. If you have enjoyed this video, please subscribe so you don't miss any of our content or free resources. Additionally, please comment on this video. We value your input. And finally, we have a special gift for you. So please continue to watch until the end. We have something for you. 1. Margin of safety. Seth Klarman emphasizes the importance of the margin of safety, which means buying securities at a significant discount to their intrinsic value. He argues that investing is the intersection of economics and psychology, where the margin of safety provides a buffer against both market volatility and errors in valuation. Seth's philosophy is best reflected in this quote: "The best way to mitigate risk is to know what you are doing." By focusing on undervalued assets with a margin of safety, Klarman aims to protect his investments from downside risks, ensuring more stable, long-term returns even in unpredictable markets. 2. Risk management and capital preservation. Risk management and capital preservation are foundational to Klarman's investment approach. He believes that the avoidance of loss is the surest path to ensuring a profitable outcome, focusing more on not losing money than on making it.
The really important thing that I learned was value investing. Value investing is a risk-averse approach. Value investing is a series of principles and a way of thinking about investing that tells you to first focus on risk before you focus on return.
This principle is evident in his emphasis on thorough risk analysis and conservative investments. Klarman argues successful investors tend to be unemotional, independent, and focused on risk before return. He prefers cautious strategies that avoid significant losses, even if it means sacrificing some potential upside. His approach aims to build wealth steadily over time by minimizing downside risk.
I think ultimately all people are risk-averse, that it's a human tendency, in a sense, to be risk-averse. That if I offered anyone in your class or anyone I ran into today the chance to double or nothing their net worth on the toss of a coin, they would all turn me down. Everybody would turn me down. And it's not because people wouldn't like to double their net worth, but it's because at the margin, the incremental value of more money is not as high as the pain from losing what you have.
Third, contrarian investing. Klarman is known for his contrarian investment style, where he seeks out opportunities in areas where others see risk. He has stated, "You need to balance arrogance and humility. Arrogance to think your ideas are right, and humility to recognize that you may be wrong."
You need not to be greedy. If you're greedy and you leverage, you blow up. Almost every financial blow up is because of leverage. And then you need to balance arrogance and humility. And I'll explain what I mean. When you buy anything, it's an arrogant act. You're saying the markets are gyrating and somebody wants to sell this to me and I know more than everybody else, so I'm going to stand here and buy it. I'm going to pay an eighth more than the next guy wants to pay and buy it. That's arrogant. And you need the humility to say, but I might be wrong.
This approach allows him to invest in undervalued or distressed assets, believing that markets often overreact to bad news or uncertainty. As he points out, the prevailing view is often wrong. The best opportunities lie where the crowd shuns. His contrarian philosophy drives him to explore unpopular or overlooked investments that offer significant potential for growth. 4. Patience and discipline. Klarman's investment philosophy heavily emphasizes patience and discipline. He believes that investors are best served by being patient and disciplined, waiting for the right opportunity to come along. Unlike many who feel compelled to stay fully invested, Klarman is willing to hold large cash positions if he cannot find attractive investments, a strategy that allows him to avoid overpaying in a heated market. He emphasizes that sometimes the best move you can make is to do nothing. This disciplined patience ensures that he only invests when the odds are heavily in his favor, reducing the risk of loss and increasing potential gains. 5. Long-term thinking is his edge. Seth's investment approach is centered on a long-term thinking. Looking beyond short-term market fluctuations, he considers this to be his edge. He believes that successful investing is about managing risk, not avoiding it, and this requires a focus on long-term thinking rather than short-term gains.
Work very hard. One of the things I think every investor needs to think about is to identify an edge. That this has to be something that's legal and legitimate and something that gives them a reason to think that they'll outperform. Investing, as I said, often highly competitive. You're charging fees that you need to earn to outperform an index fund. And in a competitive market, not everybody will, by any means, will have an edge. I think this is something many investors never really give that much thought to, and we think about it a huge amount. We think the biggest edge any investor can have, and the biggest edge we do have, is a long-term orientation. And it's easy for people to say they do, and it's harder to actually have it. One thing that's really hard is in a world where people are comparing your results often, where a short-term underperformance might truncate your ability to take a long-term approach, the ability to actually have long-term oriented money.
He states, "The stock market is the story of cycles and of the human behavior that is responsible for overreactions in both directions. By focusing on the fundamental value of businesses and holding on to investments until their true value is realized, Klarman aims to achieve sustainable returns over time, regardless of market conditions." 6. Special situations and distressed assets. Seth is well known for seeking out special situations and distressed assets, such as bankruptcies, liquidations, or corporate spin-offs. He believes that these are often misunderstood or overlooked by the market, providing opportunities for those who do the work.
We don't think we're the world's best analysts of businesses. We think we're good at that. We don't think we're the best. We think we're very good at complicated situations, so the messier, the better. We like situations with a catalyst, where there's some reason that a pricing irregularity will correct, so you buy at a discount and something will cause it to correct.
His strategy involves deep research and analysis to uncover hidden value in these complex scenarios. Seth explains, investing in distressed securities involves buying what you know to be undervalued while understanding why they are mispriced. His ability to find value where others see risk has been a key driver of his investment success, allowing him to capitalize on unique opportunities.
You can find opportunities around the edges of what other people are doing, finding situations that other people are throwing out, like the baby with the bathwater, and they exist. You have to be patient, they're not always there, but when they're there, they can be particularly attractive because the markets can become quite frenetic these days.
7. Skepticism of efficient market hypothesis. Seth is skeptical of the efficient market hypothesis, which suggests that markets always accurately price securities. He argues markets are inefficient and often emotional. They are prone to overreactions. This skepticism drives his value investing approach, where he seeks to exploit market inefficiencies and mispricings.
So for sure, there's more money in public markets, things have become somewhat more efficient. But I also see a short-term orientation that tells me that it's possible some pricing has actually become less efficient. I think when you look at Meta, the stock's been all over the place in a reasonably short period of time, falling to under 100, then rising back up to almost 300, literally months apart, for a large, well-established company that I think everybody can analyze. So I think that there are opportunities.
He notes the concept of market efficiency is more a matter of convenience than a useful description of reality. Seth believes that by taking a contrarian stance and focusing on fundamental analysis, investors can find mispriced securities and achieve superior returns over the long term.
If a kid came to me and said, where do you think I should potentially make my career, I would encourage them to look for the most inefficient pockets in the world. I also think it's important that they get mentored, that most people aren't ready to just jump right into this business right out of school. So I do think there are opportunities, but people should ask themselves.
8. Independent thinking. Seth advocates for independent thinking and warns against following the crowd. He believes that successful investing requires a willingness to think differently from the consensus and to rely on one's own research and judgment. As he states, you need to think for yourself. Don't blindly trust the numbers and don't blindly trust the experts. He also advises the hardest part of investing is staying with your convictions when the market is going against you. Klarman's emphasis on independent thought and rigorous analysis helps him to identify unique opportunities and avoid herd mentality traps that lead to poor investment decisions. Summary: Seth Klarman, CEO of Baupost Group, follows a value investing approach focused on margin of safety, risk management, and capital preservation. He seeks undervalued, often contrarian investments, emphasizing patience, discipline, and independent and long-term thinking. Seth remains skeptical of the efficient market hypothesis and looks for opportunities in distressed assets and special situations. He advises, the goal of investing is not to make big gains, but to avoid big losses, highlighting his focus on minimizing risk while maximizing long-term value. Seth Klarman's portfolio. So what stocks does Seth currently own right now? At the time this video is being published, Seth owns a very concentrated portfolio. The top 5 holdings represent over 56% of his portfolio. Here they are: Liberty Global. The ticker is LBTYK, and it is 21% of the portfolio. Willis Towers Watson. The ticker is WTW, and it's 12% of the portfolio. CRH. The ticker is CRH, and it's 9% of the portfolio. Fidelity National Information Services. The ticker is FIS, and it's 8% of the portfolio. Clarivate. The ticker is CLVT, and it's 6% of the portfolio. GuruFocus.com. So what is the best way to know what Carl Icahn and other great investors like Warren Buffett and Ray Dalio own on an ongoing basis? It is simple. Subscribe to GuruFocus.com. For a little more than $1 a day, you can get access to the holdings of over 140 top investors and hedge fund managers. You can see exactly what they own right now, as well as their trading history. There is also a comprehensive stock dashboard and 30 years of financial data and much more. You can even try it free for 7 days. We have left a link in the description below, and while we will earn a small commission if you subscribe, it's not why we are recommending it. We have used it for years, and it has saved us hours of time consolidating 13 F filings. Just one good investment idea from here will pay for a full year's subscription. Invest for free if you want to invest alongside Carl and leverage his knowledge and expertise. It's cheaper and easier than you think. May investors still don't realize they can trade for free. If you are just getting started or looking to try a new broker, we have left links in the description section to several trading platforms we trust. They include E-Trade, Robinhood, Webull, and several others. Many have amazing apps that make trading and tracking your portfolio even easier. Additional resources. Seth is one of only 3 billionaires to write a book wrote about investing. The other two are Peter Thiel and Howard Marks. We have done a video on his investment strategy if you want to learn more. There were only 5,000 copies, every printed, of Seth's book, and it is now one of the most sought-after books in finance. Margin of Safety: Risk-Averse Value Investing Strategies for the Thoughtful Investor, emphasizing cautious, value-based investing and risk management. It provides insights into identifying undervalued assets and managing uncertainties in investing. Rare and out of print, the book commands a high price due to its limited availability and popularity among investors. The last reported sale price for a copy was around $1,500 to $2,000, depending on the condition and edition, reflecting its status as a collector's item and investment classic. Finally, thank you for making it this far. As we promised, we would like to give you your gift. In the description below, there is a link to a free reading list of the 100 must-read books in finance and investing. For each of the books, we have provided a short summary so you can focus on what interests you. The reading list covers a wide range of topics, including personal finance, investment strategies, financial markets, behavioral finance, real estate, and even risk management. There is literally something for everyone. If you have enjoyed this video, please watch another one about a top investment mind or review some of the free resources we have put in the description section below.